An idea so radical. A decentralized currency free from the shackles of central banks or sovereign governments, yet backed by technology that kept a trail of every transaction. That a cryptography expert or experts used a Japanese pseudonym to popularize it in a white paper in 2008.
A year later, Bitcoin, a cryptocurrency, was born. Or if you're a crypto native like me, you would say was first mined. Cut to Thursday, 10th of January, 2024. 14 years later comes the biggest regulatory recognition.
It's been 10 years in the waiting, but crypto enthusiasts believe the SEC may finally be on the verge of approving a spot Bitcoin ETF.
11 Bitcoin ETFs, though, set to begin trading in just about 2 hours from now. It was a very long road to regulatory approval.
It's an internet-based asset that now is being arms wrapped around it by Wall Street. Now that everyone can buy it.
The first ever spot Bitcoin ETFs received the green light. They're up and running. Those funds saw big swings on their first day of trading.
This is a historic moment in the sense of it's the first time that the internet and Wall Street, they've had this healthy tension for a couple of years, even a couple of decades. And it's the first time Wall Street blinked.
The US stock market regulator gives the green signal, opening the doors of Wall Street institutions to the spot Bitcoin world, clearing 11 exchange-listed funds to list. This has been 10 years in the making.
And the names backing it, or rather, the sponsors, ranged from established players such as BlackRock, Fidelity, and Invesco, to digitally focused newcomers including Grayscale and ARK Invest and Bitwise. So it was clear no one wanted to miss out.
The last couple of hours have just been a complete blur. When we got that phone call yesterday that our 19B4 had been approved and our S3 had been deemed effective, it was almost an out-of-body experience.
I believe it goes up as if the world is more frightened, if people have fearful of geopolitical risk, they're fearful of their own risk. It's no different than what gold represented over thousands of years.
This is a monumental step for the crypto industry. And the reason is that there's 52 million Americans who have been using crypto over the past decade. And I think they've been hungry for some kind of acknowledgement from government and the SEC in particular that this asset class is here to stay.
This is a big idea. It is the first global, decentralized, digital, rules-based, critical there, rules-based monetary system in history.
But some skeptics have long held their doubts, like the Oracle of Omaha.
If you had bought gold in 1942 and you say, we might lose the war and we might have to run off to some other country and, so let's put our assets in gold, you would have less than a penny for every dollar you got from owning stocks. Less than a penny. Now, if somebody calls that a store of value, I think they're delusionary.
But why? Because Bitcoins, one may argue, do not have economic value. Unlike gold, which you can melt the gold bars and make jewelry. Bitcoin's value mostly comes from how many people believe in it, the fact that it's in a limited amount, and the expensive process of mining new ones. Mind you, unlike traditional currencies, Bitcoin has no physical representation as well. But with the ETFs in the market, you and I can join the party. A party where one Bitcoin is valued at, hold your breath, $46,000. I repeat, one Bitcoin equals to $46,000. And that was last week's number. On day one of the ETF trading, inflows of over $4.5 billion flooded the counters, triggering a fee cut among funds to get more business orders and market share.
We actually think that the ETFs mark the beginning of the mainstream era for Bitcoin. And that mainstream era means a lot wider adoption and that will imply buying pressure.
That was Juan Leon. He's the senior crypto research analyst at Bitwise, one of the 11 ETFs that got the SEC permission to launch the ETF last week. He's joining us all the way from Colombia, South America. His peers are predicting that Bitcoin ETFs could draw 50 to 100 billion of inflows this year alone. Is that number overblown? What are the ramifications of this for the crypto world and retail investors? Will this approval nudge the Indian central bank to have a friendly stance toward crypto?
The cryptocurrencies have absolutely no underlying. Cryptocurrencies have certain huge inherent risks for our macroeconomic and financial stability.
So RBI Governor Shaktikanta Das's opposition remains vehement even today. But in this very special episode, we crisscross continents to get you the global trends and tales of triumph. But from Wall Street, we will also come to Dalal Street and understand what are ETFs in the first place? How do they work? And most importantly, can you and I, sitting in Mumbai, Mangalore, or Madurai, be able to buy into these US ETFs and join the party?
So they can invest via the LRS route. So LRS, which is the RBI's liberalized remittance scheme. You can open a foreign brokerage account, load money in it, and then access any equity ETFs or stocks that are available in the international markets.
That's Viram Shah. He's the co-founder of Vested Finance, an alternative asset platform. The company helps Indians invest into US-listed stocks and ETFs.
This and much, much more in today's episode with us,
Apurva Mittal
and Arijit Burman, and you're listening to the Bitcoin Bites into Wall Street, only on the Morning Brief.
Let's kickstart this conversation with Juan Leon. He's the senior crypto research analyst at Bitwise, one of the 11 ETFs that just got the approval from the US market regulator. Juan is joining us from Colombia. My first question is, Juan, why Bitcoin as an ETF product? Why is that needed? Why is it necessary?
Absolutely. That's a great question, one that we've been getting. Trading and buying and holding Bitcoin itself, just Bitcoin, the asset, not the ETF, is for many people who are not very tech savvy, it's a fairly complex process. You need a wallet and you need the keys and you need to transact on the blockchain and all of these things. That's a little complicated and many people don't have the time or the expertise or the willingness to do that. On the other hand, Bitcoin inside an ETF vehicle completely abstracts and simplifies that. And worldwide, certainly in the United States, but worldwide, especially for professional investors, ETFs are the most popularly used investment vehicle because it simplifies so many things. If you look at ETFs versus mutual funds, ETFs have become much more popular than mutual funds because you can trade them on stock exchanges just like a stock. You have intraday liquidity and trading. Whereas with mutual funds, you can only redeem or subscribe once a day. You have tax benefits. And so ETFs have become the most popular vehicle to trade in financial markets. So a Bitcoin ETF really makes the access for market participants, broadens out the access that previously was restricted to very technical people that wanted to deal with Bitcoin. Now, anyone with a brokerage account can access Bitcoin through an ETF and then trade it like they would trade the S&P 500 or any other financial instrument. So it really allows access to both retail and institutional investors in a way that wasn't previously available. And so I think that's part of the reason why Bitcoin ETF is such a big deal. I can tell you, for example, that 80% of wealth previous to a Bitcoin ETF basically didn't have access. And why? Well, because their compliance departments, their investment committees did not allow access to Bitcoin because of the restrictions, the regulatory restrictions. But a Bitcoin ETF, regulated by the SEC, gives that stamp approval, a stamp of legitimacy that then allows them to clear the hurdles of compliance in their company departments so that they can include it in their portfolios and can invest in it. At Bitwise, for example, we've been running a survey of professional financial advisors for the past 6 years, an annual survey. And in our last survey that was published about a week and a half ago, 88% said that they were waiting for a Bitcoin ETF in order to be able to allocate. So you can see that shows you the massive appeal that Bitcoin ETFs have and how much people are anticipating and waiting for them.
I'll give a statistics here. I was reading up. When the first gold ETF was launched in 2004, the first time that you could store gold digitally, the first week, the inflow was $1 billion. So, and here you are, 4 billion on day one. So clearly, this is a historic moment. So would you say this was the moment, the biggest moment, bigger than maybe the Coinbase IPO?
Bitcoin is now 14, 15 years old. So if you think about it, it's kind of, this moment to me marks sort of the end of like the teenage period and the passage into the rite of passage into adulthood for Bitcoin. I think the ETF approvals mark that rite of passage that gets it to the adult phase of institutional adoption, which is what everyone in the industry really wants. If we want crypto to be adopted worldwide, to become a mainstream technology that is able to impact the world, then we need institutional adoption. It's not going to happen just by retail. Going back to your point, and especially for your audience with gold being so prominent in India, the gold ETF analogy is very apt. While they're very different assets, there's many comparisons of Bitcoin being a digital version of gold and an emerging store of value. We've been looking at the launch of these ETFs similarly in many characteristics to the launch of the first gold ETF back in 2004. And it was a similar case where before the launch of GLD in the US, institutional investors were really not able to access gold for their investment portfolios. And GLD really opened up that market. And what you saw is that from 2004 to, I think, 2009, that 5-year period, or maybe even 2010, gold went on a 5-6 year bull run after that. And while it had $1 billion of inflows in that first day, the inflows into GLD actually did not peak until many years later. It was a multi-year development. We see that as a guidepost for how things may evolve with the Bitcoin ETF market, where we think the flows will continue to grow over time, over a multi-year period. And we hope that the same is true in terms of the price action.
But are you expecting new all-time highs this year itself on the back of this SEC approval? Look, if you have Franklin Templeton come out with laser eyes, I think there cannot be a bigger thumbs up than that.
That's true. They did change their profile picture to the laser eyes. People are really getting on board with the crypto native imagery and iconography. Who doesn't love a good price prediction, right? So we need to talk about that too. Actually, at the beginning of the year, we put an annual report that is called our 10 predictions for the year. And one of our predictions this year is that Bitcoin will hit all-time highs. And we think our prediction is that it'll go to 80,000 and perhaps above. Going above the 67,000 current all-time highs. So we think that's going to be the case. And we think it's going to be the case because if you think about Bitcoin, it's a commodity asset like gold that is where it's based on supply and demand. Price action is based on supply and demand. And this year in the Bitcoin market, you have both a supply shock and a demand shock. The demand shock we are expecting coming from the launch of these ETFs, and the estimates from market participants range anything from 30 billion to upwards of 200 billion over the next coming years into these ETFs. Wow. We'll see how things play out this year, but that's starting this year. That's going to be a significant net new demand coming into the market. And then on the supply front, you have in April what's called the halving, which is every 4 years. By design, the Bitcoin network cuts the number of Bitcoin issued by half. And at current market prices, that implies a reduction in supply in the market of about $7 billion. So you have less supply coming and then new demand. And so that, if you do the Econ 101, that usually goes a certain way, one way for prices.
But one, the interesting thing is, even though we would want to think that Bitcoin is a store of value and it is, we want to equate it to gold, it has not behaved like gold in the past. So one question that I had is, what makes Bitcoin valuable? Because at the end of the day, gold is tangible. You can, make jewelry out of it, whatever said and done. It's something you can feel. But what is the use of a Bitcoin for a retail investor or someone, on the road, apart from just hoping for some reward because it's, constantly going up and down?
And if I may add to that question, that is therefore Bitcoin positioning itself as a legitimate currency of the internet era?
Yeah, those are fantastic questions. And I think, as you mentioned, gold has proven itself over, I think it's something like a 5,000-year track record of being for a store of value that people continue to rely on. When we talk about Bitcoin, there's the question, yes, how can something that it lives in the internet that is intangible store value, something you can't touch, physically touch? But I think that, one of the big innovations of Bitcoin is that it brings property rights onto the internet really for the first time. And why is that? Since the dawn of the internet, companies have issued digital certificates of ownership for anything and everything, whether it's a piece of art or a piece of real estate or whatnot. But those certificates of ownership have always lived on centralized servers managed by the company. And those records could be tampered with by the company. If the company goes out of existence, they could go out of existence. And so they could be forged very easily. But with Bitcoin and the blockchain ledger, that becomes something that is impossible. A blockchain is a shared database, right? And the innovation there is that it's a database where everyone can look into. It has transparency. Everyone can see what is going on, but no one person can change it. Bitcoin was made with a very specific purpose, which is to store and transfer value. And by making the code less complex, it makes it more resilient. So its purpose has been from the get-go to be a peer-to-peer transaction system or financial value transaction where you can transact at the speed of the internet, very low costs. And given the property rights, it allows you to hold value in a tamper-proof way in the digital world. And while it's not tangible, we are increasingly living in the digital world, and the digital economy is taking an increasing share of the world's economy. So I think gold will continue to have its place in the world, but I think Bitcoin has an increasing role in the world as well. And I think, as we go forward, some people will store some of their wealth as a backup in gold, but people will also look to Bitcoin to also diversify the way they store their wealth as well.
Juan, you talked about that in your survey, 88% of portfolio managers have been waiting for this opportunity for Bitcoins and cryptocurrencies. And ETF clearly seems to be that opportunity. Typically, thus far, we've seen 1 to 5% of allocation for this asset class. Will it double? Will it treble? Or you expect slow and gradual adoption? Because, I'm hearing ridiculous numbers also being thrown around. Some are saying 10 billion, 20 billion, 30 billion as possible flow targets for Bitcoin ETFs in the first year itself.
The money that will come in, say this year, whether it's 5, 10, 20, 30, 50 billion, that's net new money in many cases from professional investors who have never allocated to Bitcoin before. So there's huge bandwidth for Bitcoin to soak up in investor portfolios. One of those markets in there is institutional investment assets, which is a 100 trillion market. And that is largely the market that I'm talking about that hasn't been penetrated. And so even if you have a lot of demand, net new inflows into Bitcoin ETFs this year, it's not the case that will necessarily explode the size of the allocations in portfolios, because it's portfolios that are just placing an allocation for the first time that didn't have exposure before. Now, at Bitwise, when we talk to clients, historically, we've recommended a 1 to 5% allocation in their portfolios. What really surprises us in this year's survey is that for the first time, allocations in a portfolio that were 3% or greater doubled in size year over year. So while the majority of allocations are still within the 1 to 5% range, we're seeing those larger allocations of 3% or more start to increase. And it's like with anything new, right? The first time you try it, when something is foreign and unknown, you're more skeptical. But then the more you get comfortable and learn, you experience it in a stronger way. And so I think that will happen with Bitcoin in portfolios and in investor portfolios as well.
Correct. But despite all the euphoria, the hullabaloo, being in red, that's not a great space to be either on day one itself. Did that bother you?
Frankly speaking, of course, I would have liked to see in the green for the day and Bitcoin to be up on the day. That wasn't what happened. But the reality is Bitcoin was up 157% last year and continued to move up this year, in large part in anticipation of these ETFs. So there was a lot of discussion about the ETF approval being priced in perhaps already. And so this is not a 1 day or 1 week or 1 month story. This is not even a 6 month or 1 year story. This is a multi-year story. As we said, we think in our predictions as a company, we think that Bitcoin ends the year higher than where it is now. We actually think that the ETFs mark, the beginning of the mainstream era for Bitcoin. And that mainstream era means a lot wider adoption, and that will imply buying pressure.
Absolutely. And so clearly, these ETFs will influence the interest in the underlying assets.
Yeah, absolutely. You'll have investors putting in money into these ETFs, and then these ETFs will have to go out and buy Bitcoin. And so the trading counterparties and market makers will have to source Bitcoin from exchanges, possibly on-chain directly. So you'll have to have market participants go out into the market and buy the Bitcoin. So definitely it has a direct correlation. Increased demand for Bitcoin ETFs will have increased demand on the asset itself.
So in May, an Ethereum ETF approval is also pending. Do you think we're moving in a direction where, of course, there'll be greater adoption, but more and more people buying ETFs rather than investing in the underlying asset directly, with an Ethereum ETF also coming up?
I do think that as if and when more approvals happen for other crypto coins to be embedded in ETFs, I think that will spur more adoption. I frankly think that it's unlikely that they will be approved this year. First of all, it took 10 plus years for a Bitcoin ETF to be approved. And while the first time with anything is the hardest and the longest, I don't think it'll be the case that in a 1 year period, in the same year that they approve the Bitcoin ETFs, they're going to also approve the Ethereum ETFs, mainly because they're different assets and there's different considerations. Yeah. Part of what held up Bitcoin ETFs for 10 plus years was the SEC's concern with the liquidity and depth of the market, with market manipulation, with volumes in the market. And the reality is that the Ethereum market and its trading volume is much lower than Bitcoin's. But I think the market still needs to grow and develop more for the SEC to feel that it's a liquid and deep enough market that is not subject to market manipulation. There's also the question of decentralization, right? Bitcoin is the most decentralized of all assets. And Ethereum, while it's quite decentralized, it's not as decentralized as Bitcoin. And so there's still questions lingering about the decentralization and how that fits within the security versus commodity definition. We're hoping that at the very least, both Bitcoin and Ethereum are classified as commodities. That hasn't been fully decided yet, but that's another thing that Ethereum would have to clear in order to be approved in an ETF format.
Juan, you talked about the SEC, so let's talk about the regulator. It's a U-turn for SEC as well vis-a-vis Bitcoins and crypto. What really moved the needle? The entry of big daddies of Wall Street asset management, BlackRock, Fidelity, Invesco, and then people like even ARK. What, according to you, changed the game?
I think them entering the market was the confirmation that they thought an ETF was viable. But I think what really made an ETF viable was the outcome of the Grayscale versus SEC lawsuit, where the courts ruled in favor of Grayscale in terms of their multi-year lawsuit of trying to convert GBTC into an ETF. And finally, SEC sort of being backed against a wall and running out of ways to say no. I think the final straw was that previous to this ETF approval in 2021, the SEC approved the BITO, the Ethereum, the Bitcoin futures ETF. And so they approved that vehicle, an ETF holding Bitcoin futures. And the big argument that the SEC had been giving to deny the Bitcoin ETFs was that it needed to prove that the Bitcoin ETF futures market was deep and liquid and that there wasn't market manipulation there. So by approving the Bitcoin futures ETF, they were saying that they don't think there's market manipulation there. The market is liquid enough, is deep enough. And ultimately, futures products settle to the spot market. So if you're saying that you're okay with the futures market, then you're denying the spot market products. There's an inconsistency there. And that is the inconsistency that Grayscale launched the lawsuit on, or the last argument that they made, and where the courts ruled in favor, because there's no rationale for denying that. So that was really the straw that turned things around, and that caused the courts to rule in favor of Grayscale. And at that point, the SEC has ran out of arguments. And so if you look at it, once that decision came, then that's when the big players that you were talking about, BlackRock and all the others, saw that there was now a viable path forward to approval. And that's when they came in with their applications. And that's, of course, when the whole market got very excited and started anticipating that the approval was much more likely than previously was possible.
But the regulators at most of the emerging markets, or the central bankers especially, have been rather consistent in their vehement opposition to opening the market, because they feel it's speculative. They feel it's very, very volatile, and it adds no economic value fundamentally. So what is your response to India's central banker, for that matter, who is still insisting that this is a mania, and he's comparing it still with the tulip craze, which was an asset bubble that everybody talks about that happened in Hong Kong?
Yeah. I will respectfully disagree with them on that. I think it's an emerging technology that has real world use cases. I think Bitcoin as a store of value in a digital world makes a lot of sense. I think the decentralization concept of and utility of the technology underlying crypto and blockchains can help address some of the centralized tech monopoly problems that we're facing in the world. So I think the technology, aside from being a financial asset, is also a technology asset that has real world applications in our world. And frankly, I think they still have a couple of steps to go in understanding that the technology can be additive to their country's currencies and financial systems, and not a direct competitor and threat. Bitcoin, you can use it for financial transactions, to buy and sell things in Bitcoin and pay for goods and services. But that's not the main use case, and most people are not using Bitcoin for that. Most people are using it more akin like a digital version of gold, to store value and to transfer wealth, but not to pay for your everyday coffee. So it's not in direct competition with the currencies. And what is more close to being a competitor, but it's complementary, it's not a competitor, is stablecoins. So you can transact in real time with real-time settlement. And so using a stablecoin that's backed by a national currency, you are actually increasing the velocity and the usage of that country's currency. I think central bankers should learn more about the technology and understand that it can be helpful for their country's currency, for their country's treasury system.
But Juan, having said that, we have had few very high-profile bad actors trying to subvert the system. FTX, Celsius, Blockchain, these were real examples. I mean, the FTX founder was a rock star. Now he's in jail. So that obviously makes any central banker very, very wary.
I absolutely agree with you on that point. And it's been really unfortunate. It's created a black eye for the industry in the eyes of the public, in the eyes of politicians. So we all hope that wouldn't happen. But the reality is that is a failure of regulators, and that is a failure of human greed, and not a failure of the technology. Sam Bankman-Fried and the others you mentioned look at opportunity in a market that is largely unregulated, and they go in and they take advantage of the everyday investor. Maybe we could have avoided the frauds if there had been better regulation in place to protect investors from these fraudsters, but the regulation wasn't in place at the time. So that is the unfortunate thing. During those whole debacles, the centralized companies run by these fraudsters, FTX, those collapsed. But if you look at the protocols, the decentralized exchanges, they continue to run perfectly. So it wasn't the technology that failed. It was the people that failed. And the people failed because of greed, incentive for greed, and the opportunity to take advantage of that because of lack of regulations. Unfortunately, because of what happened, then you had a huge backlash from politicians. saying the technology is evil. And that has been really unfortunate because that's put us steps back in terms of politicians wanting to engage and learn instead of they've repelled it point blank. And so now that those things are behind us, fortunately, actors in the space are re-engaging with politicians who are learning. And what we've seen actually has been very positive with regulators and with politicians. The more they learn, the more they embrace it. They realize that it's a great technology that actually solves a lot of the fraud and manipulation and counterparty risk and conflict of interest that exists in the traditional financial systems because of transparency of blockchain technology.
If I look at some of the potential challenges, the very premise of Bitcoin or crypto is that it's, the self-custody part of it. But the moment you're trusting an ETF, you're trusting a fund manager. So the premise now is reliance on a third party. The AMC will now have custody. So you are, in effect, giving up custody of something where you were managing on your own. Isn't there a fundamental or a philosophical dichotomy there?
I think you're totally right. I don't think that's in all cases a bad thing. I think it's a consequence of what had to happen for this asset class to grow up. Bitcoin was founded on the eve of the great financial crisis in 2009 as a mechanism to be able to, as you said, hold in custody your wealth outside of the purview of the central banks, of the financial institutions that failed during the great financial crisis. And certainly now with ETFs coming to market, you're right. If you buy an ETF, instead of buying the Bitcoin yourself, the custody of that will be in the hands of the institutional custodian that works with the ETFs and not yourself. So that is a trade-off you're making. Now, I suspect that for really hardcore crypto natives, many of them will continue to do it themselves. They won't buy the ETF. They'll continue to buy and hold Bitcoin themselves in their ledgers.
And doesn't that lead to fragmentation? So there could be slippages between the net asset value and the actual value.
Yes and no. I think the custody in the ETFs is with the issuers, not with the individual, which does detract from the ethos, but it's what you need for institutional adoption and for mainstream adoption. In terms of the slippage itself, a lot of people were talking about, yes, these ETFs coming to market because there's tight supply. There's going to be this overwhelming demand on day one. Is there going to be a very wide slippage between the value of the actual Bitcoin and the value of funds, what they're trading at? And if you saw in the numbers that the slippage was very tight, it was in many cases under 10 basis points. I think the trading, especially as the volume in these ETFs continues to grow, the slippage will be very, very, very minimal, and they will be very tight because there is a mechanism within ETFs to arbitrage that away. So I think that's the beauty of having the ETF vehicle. It's an efficient vehicle for trading.
In the era of ESG, how do you reconcile planet and profits?
Yeah, a lot of criticism was put on the Bitcoin mining industry early on because of the energy intensive nature of it. But the industry has evolved quite well. And while in the early days it was using mainly CO2 sources, now I think the latest figures are that on the whole, crypto mining is about, I think it's close now to 70% renewable energy sources. That's not what you see in the mainstream narrative, in the mainstream media. They still say that Bitcoin is bad for the environment. But the true figures are that most Bitcoin mining is highly energy efficient and based on renewable sources. And if you look at the mandates of the Bitcoin miners, most of them, if not all of them, at least the public ones, have a mandate to get to zero carbon emissions. So I think it's actually much more positive than what the media has portrayed.
And the last question that we have for you is, if you bump into Warren Buffett, the Oracle of Omaha, on the way to buy coffee, remember what he said: Bitcoins are nonsense. What would you tell him today?
Bitcoin is a delusion.
I know. That's been the heartbreaking in joining crypto because, I come from a traditional finance background. I'm a CFA. So, of course, I look up to Warren Buffett and have learned so much from him and admire him so much. He's one of my financial gurus, mentors that I look up to. So, yeah, his view on Bitcoin is very negative because of the way he invests, right? The whole premise of how he has built up Berkshire Hathaway has been by investing in cash flow producing assets. And he's been incredibly successful. So he traditionally hasn't invested assets that don't produce cash flow like gold, like oil itself, or any other commodity. So I understand why he doesn't believe in Bitcoin or in the merits of Bitcoin as an investment. But to him, I would say, based on that, one, I would tell him, there are many assets such as gold in the world that have value, even though they don't have cash flow. And then second, do what you've done in the past. You don't invest in gold, but he's invested in gold miners. So invest in the Bitcoin miners. They'll produce cash flows. And then that's a way that you can get exposure to a 21st century asset.
Let's shift our focus to a time zone closer to home. How does this stamp of approval from SEC change things for Indian crypto enthusiasts who've been struggling with death by taxes? I sit down with Sandeep Goenka, who's a partner at Lightning Ventures, a Bitcoin-focused venture capital firm, and Viram Shah, who's the founder at Vested Finance, a startup that helps Indians invest in US-based equities and ETFs. I begin by asking Viram, how can Indians join the spot Bitcoin ETF party?
So they can invest via the LRS route. So LRS, which is the RBI's liberalized remittance scheme. Under that remittance scheme, they allow certain purposes, one of which is investing in the foreign markets. So that's S0001. And through that, you can open a foreign brokerage account, load money in it, and then access any equity ETFs or stocks that are available in the international markets. Folks like us got into the market about 3-4 years back and simplified the journey. So you could now open a US brokerage account in an easy manner, load money. I mean, up until now, people have been adopting this. We've seen almost now close to 200 million, more than 200 million deposits. Folks have been buying companies like Tesla, Nvidia, Apple, also ETFs that people are interested in. They've been doing S&P 500 ETF investments. And now this will become another ETF that one can invest in.
So Viram, would you say that this is a game changer given the current crypto regime in India?
In India, if you're directly investing into crypto, then there are two things, right? One, there is the 1% TDS that comes in. From a capital gains perspective, there is that flat 30%, and you can't even offset losses against it, right? Versus that, if you're investing internationally, then there's no TDS applicable because you're not buying a crypto asset directly, right? You're buying units in a fund. So no TDS that you need to pay. And from a capital gains perspective also, it's definitely better than the direct alternative because it's treated as, so it's either short term, which is as per your income tax slab, or if you hold it for 36 months or more, it becomes long term. And the rate there is 20% and you get indexation benefits also. So the tax rate does become better. There is one downside though, which, in the last year government budget, they introduced a TCS on any remittances that are happening. So while that's not an additional tax like TDS as such, TCS essentially means that the government is collecting tax upfront and then you can offset it against your future tax liabilities or you can take a refund against it. And just one last thing on the TCS is that it's only applicable if you're remitting more than 7 lakhs in a year. So that tends to be enough for quite a few people who can build a portfolio up to $10,000 a year and not have to pay the TCS.
Sandeep, you and I have had conversation about institutional interest, which is very evident in a product like this. But what about retail investors? Do you think they would be interested too?
Yeah, absolutely. I think all sorts of serious investors will be attracted towards investing in a Bitcoin ETF. There are different reasons for different types of investors. I think for financial institutions, there is no choice but to invest in an asset through an ETF. When there are multiple stakeholders in a financial institution, the financial institution cannot go out directly buy Bitcoin because then they have problems in deciding how to custody the Bitcoin. It's a massive issue. And a Bitcoin ETF just completely solves that problem for financial institutions. So literally from a legal point of view, financial institutions for the first time can have exposure to this asset class through a Bitcoin ETF. I think for retail investors, for serious retail investors, like for HNIs, there is a segment of this investor category which really struggles with buying Bitcoin and how to custody Bitcoin. And then they're worried about security and stuff like that. So for that segment is going to be attracted to a Bitcoin ETF as well.
What is your estimate of the demand that you might see from India for this product?
It's difficult to say. So, if you look at it today, one of the most popular stock on the platform tends to be Tesla and Nvidia now because of AI. So what we've realized is individuals want to invest into up-and-coming themes through the US markets because that's something that you might not have in the India market as such yet, right? Like there are a few tech companies but none that are at significant scale that you can invest in. And so I think they treat the international markets as an avenue to bet on these sectors, the new EV sector or the AI sector. So if somebody, and I think there is interest in the crypto sector as well from a decent amount of people. So if you want to bet on that sector, then this becomes an interesting avenue. So I do feel that there might be quite a bit of interest, but we'll only be able to say after some time.
What about the risks associated with the Bitcoin ETF as against buying an actual Bitcoin? Do you think the price movement would relatively mirror the actual Bitcoin price? Is one more riskier than the other?
Two things that could happen. One is because Bitcoin trades 24/7 in the direct crypto markets, whereas the ETF will only trade in market open hours. We'll have to see how it mimics the price. And second is just tracking error being introduced because, the underlying fund might not be buying the Bitcoin real time as investments come in. So there might be some tracking error. So that's something that we will have to monitor. However, it still should be a very good option to get exposure to Bitcoin.
Sandeep, last word is with you. Does this force the hand of the Indian regulator to look at digital token more seriously or be more accepting towards crypto more broadly?
We have systematically prevented an asset which has increased 10x, 100x in value from Indian consumers to own it, and for that value for the country to increase and for taxes to be collected. So I think the way the current taxation is, it basically has killed the volume on Indian exchanges. It has pushed that volume on non-Indian exchanges. And just yesterday, I think just last week, the government banned the access to those international exchanges. So what you've basically done, the second order impact, I'm sure the government has their reasons and stuff like that, but just to consider the second order impact of this is if you're a retail investor who had some cryptocurrencies on an international exchange, you've gifted those cryptocurrencies to that exchange because those investors cannot access that. The customer support is terrible on these, and you've just literally transferred those cryptocurrencies from Indians to some entity internationally without having any access, any recourse to
without
that.
any notice
Without any notice as well. So I think the fact that this asset is now, kind of more and more accepted in the US will hopefully have a positive second order impact on governments like the Indian government. So I'm hoping better sense prevails and that they start trying to understand this technology without prejudice.
Let's be honest. We can all wish away crypto, Bitcoins, Ethereum, but the fact is the bullet train has left the station and it is hurtling towards us. So that's it for today. Hope you liked this episode as much as we did while putting it together. This is Arijit Barman from the Economic Times, and you are listening to Bitcoin Bites into Wall Street only on the Morning Brief with my colleague Apurva Mittal. A special thanks to our guests Juan Leon, Sandeep Goenka, and Vikram Shah for sharing their amazing insights. This episode was brought to you by sound designers Indranil Bhattacharjee and Rajesh Naik, and producers Vinay Joshi and Vinayak Agarwal. Executive producers Anupriya Nair, Anirban Chaudhary, and yours truly. Thank you for listening, and if you like this episode, do spread the word among friends and on social media. All new episodes of the Morning Brief podcast drops every Tuesday, Thursdays, and Fridays. It streams on Amazon Prime Music, Spotify, Apple, and Google Podcasts, and of course, ET's own audio platform, ET Play. Have a great week ahead. Until then, goodbye and good luck. All clips used in this episode belong to their respective owners. Credits mentioned in the description.